In today's video, traders, we're going to be talking about trading psychology, and I'm going to give you a few tips that I use in my own trading to kind of handle the emotions or deal with the psychology behind trading. Now, here's the thing. A lot of people want to say that people should trade like a robot. The reality as traders is that we are still human beings, and no matter how robotic we are with our trading, we're still going to have those emotions. In today's video, I'm going to give you some tips on how you can control those emotions and how you can kind of keep those emotions at bay to improve your consistency and ultimately to potentially become a consistently profitable trader. Let's get into the video right now. So welcome back, traders, to another one of my videos. My name is Nick, also known as Trader Nick here on YouTube. I make all sorts of trading educational content as well as analyze and share my research of the currency market with members as well as the team here on YouTube and the community that we do have. So today we're going to be talking about trading psychology, and this is a topic that is very, very important and often overlooked by traders. You know, what I find funny is that when I do ask a lot of my kind of community members, the VIP group that we have a lot of discussion, and a lot of times what I hear from traders is not that they struggle with technicals, right? Is that number one for them, for a lot of people, is that this trading psychology concept is really tripping them up, right? It's the kind of emotions that come when a trade goes against you or a trade goes in your favor, right? Trading psychology is a huge topic that gets overlooked by traders. Everybody wants to talk about the kind of the entries, right? They want to talk about entries. They want to talk about exits, right? They want to talk about all the shiny objects of trading, right? They want to talk about all of the kind of more fun topics. And a lot of times it's not the most fun topics that matter the most in trading. That's why trading is not necessarily easy. It takes a lot of work and it takes a lot of time. Today, I'm going to give you a couple tips on how you can improve your trading psychology, how you can focus in on this concept and master it, because it is absolutely crucial in becoming consistently profitable. The first thing you need to do about, trading psychology is get realistic, okay? So many people are looking for quick money. I say this again and again on my channel, and it's because I do want to genuinely help people. My channel, the purpose of starting this channel has always been since when I had nobody watching the channel, when it was like my mom and my brother watching my channel. The goal has always been to try and help people along the way in their journey. And one of the things that I found kind of that really changed my trading was getting realistic, understanding that gains of 50% per month, they're a little bit out there, right? Are they possible? Sure, but you're going to be taking tremendous amounts of risk. I have an entire video about risk management that you can go check out if you're interested in that topic, but today we're going to be talking more specifically about trading psychology. But the first thing we need to do is get realistic. Understand that it's not going to be quick and it's not going to be easy, right? If you're looking for quick, easy money, you should probably look somewhere else, and honestly, maybe not look anywhere, because quick, easy money is like winning the lottery. That's not something that is very likely to happen, right? In trading, it takes discipline, and that's all about what we're going to be talking about today with trading psychology. So we're going to be focusing on discipline, right? It's all about discipline. And here's the thing. And if my handwriting is terrible, trust me, it's going to be bad. It's because I'm using a mouse to write, so it's a little bit rough. But you can see it's all about discipline. The thing about trading consistency is it's not just about technicals. It's not just about putting your entry. It's not just about putting your stop loss. It's not putting about your take profit. It's about discipline in what you're doing. And being consistent is the next one, right? Here's the thing. What people will often do when they're trading is they'll move their stop loss. And if this is you, I'm not trying to call you out. I'm not trying to make you feel bad or insult you. But here's the thing. I was there too, and that is one of the dumbest things you can do, because when you're trading, you should have a plan, right? If you have a plan and then your emotions get in the way and mess up that plan, well, you just killed any chance of you being consistently profitable. So trading psychology is all about having a consistent approach in the market. It's about sticking to your plan. Well, the old saying is plan your trade, trade your plan, right? That is so true, and it goes back to the concept of trading psychology. The problem is it's easier said than done, and this is where the discipline comes in. We need to be disciplined as a trader, and this is why. The best way I like to explain this concept is to understand that we are running our very own businesses. Every single one of us. If you trade, I trade, we're both running businesses, right? In my own trading, in my own business, I like to constantly be making sure that I'm also journaling my trades, right? I journal all of my trades. right? And the thing is, I used to journal them in way more detail. I've just gotten way more busy with all this stuff going on. I run a couple businesses as well as I run this YouTube channel, and I deal with members and work with them. So I still keep a journal though. Within all of the busyness, I find a journal incredibly important. I track all my trades. I share, my thoughts on the paper, or on the I have an Excel spreadsheet. You can do it physically on a piece of paper, on a book, or you can do it in an Excel spreadsheet like I do. But I like to keep track of my trades because it gives me an easier access to doing these things, right? You can see by journaling, you become more disciplined, you become more consistent, because here's the thing. If you mess up your trading plan, let's say that you have an entry, right? You're entering the market long here, right? We'll put L for long, and you can see that we have a take profit here, right? And a stop loss here, right? And let's say that we've got a nice little trade setup. Let's say for whatever reason, let's say we had a simple double bottom, right? Prices come down to this double bottom, right? And we say, okay, at this point, I think the market is going long, so I'm gonna enter my long position. I'm long, price starts going in my favor a little bit, but then it ultimately starts going down. Well, here's the thing. If we don't follow our trading plan that we've planned, what we might do is do something stupid, like keep a big position size open and move our stop loss down, right? And then let's say the trade keeps going against us, right? And what do? So many traders will get rid of this, right? And they'll move it down here. And they'll keep doing that process, right? Let's say that, people do this. I did this. This is why I know firsthand what people do, is because this is something that I did, right? When you have a trading strategy that calls for you to keep your stop loss in place and not to move it, right? A lot of times people mess that up. I used to mess that up all the time, right? So then suddenly look at this. Your good risk to reward trade just went to a terrible reward to risk, right? You have this amount for a reward, and you can see that the risk is massive. And if this trade closes out, it's going to wipe out a lot of profits. If this sounds like you, again, I'm not picking on you. I'm telling you what I used to do because I know firsthand what traders do. I've been there. I've done that. I've been trading for quite some time. I know the emotions. It's very tempting sometimes to just move that stop loss just a little bit, but that violates this concept of discipline. And it violates the concept of consistency. And at the end of the day, when you have to take that into your journal, right? One of the things that I track in my journal is the emotional feel about the trade. Did I feel like I stuck to my plan? And if I have to write in there that no, I felt like I broke my rules, then that's extremely, extremely humiliating to myself, right? Even though nobody else is looking at my trading journal, it still feels very bad to say, well, I wasn't consistent. I wasn't disciplined in my approach. I broke my rules. And now the punishment is I have to write it down in a journal, right? That's something that's extremely, extremely painful to do for me and for plenty of others. So I do highly encourage you, start writing a journal, because this is a business for you. It should be a business for you. If you're not treating it like a business, then what are you doing, right? When you have a business in real life, and you have a business, you have some sort of accounting, right? Accounting is like one of the most core principles of running a business, is you have to have accounting going on to track things that are going on. A journal is kind of like your accounting sheet when it comes to trading. Now, you can also write down your profit and loss on particular trades in this journal, but this is going to be like your accounting sheet. But on top of your accounting sheet, you're also going to write kind of the kind of result emotionally or psychologically for you on your trades, right? So journaling your trades are something that I highly, highly recommend you do. If you are not already doing it, I definitely recommend you take the time after each trade, maybe at the end of the day, before bed, or when you wake up, whatever. Write down something in your journal, because you don't want to be doing this, right? And I promise you, because this is something that this helped me tremendously, was starting to take a journal consistently. I promise you, you're going to be way more feeling bad about breaking your rules, because if you do something like this and you have to write it down in a journal, it makes your journal look really ugly, right? Let's say that this is your journal right here, and you're writing things down and things look great. You scribbled down that you had a winning trade, you scribbled down that you had a losing trade and stuck to your plan. By the way, that's a good trade, right? Good trade, you had a winner. Good trade, you had a loser, right? I'll say that again. A good trade can be a loser, because if you're disciplined and you're consistent and you've back tested your strategy and you know that over time you're more likely to make money than lose money, that's a good trade, even a good loser. There is such thing as a good loser. I'm saying that again and again on purpose. And let's say that you're doing well, but then suddenly you do something like we see on the right side of the screen, and you have to write down that you did this. you did you let emotions get the best of you. What I find so commonly, guys, is that a lot of times people tell me that they struggle way more with trading emotions than they do with technicals. In fact, a lot of times people will say, hey, if I just stick to my plan, this would have been a very small loss and I would have continued on and had a nice little winner and the week would have closed out profitably, right? That sort of thing is something that people get tripped up on. A lot of times it's not the technicals that mess people up. It's totally doing stuff like this. This can ruin an entire week of profits. If you do this and you let that happen, that's why I highly encourage you guys, get a journal, go buy one, or do it in an Excel sheet or a Google Doc or whatever. There's free ways to do it as well. Write down the way you felt about your trades. All of that stuff is going to be extremely important in creating consistency and creating discipline. Guys, thanks so much for watching the video. We'll catch you next time.